back in 2012, it was illegal for ordinary people to invest in startups. You had to be an accredited investor, basically a millionaire. And our founder said, this is not fair. This is not very American. I can invest in any company on the public stock market. I can invest in Starbucks on the stock market. I can go to Vegas and drop $1,000 on the spin of a roulette wheel. Like, why can't I invest $1,000 in my friend's local coffee shop? This is too bad. So we're trying to just lower the barrier to entry, get more people participating and investing in startups they love. And we think the economy would be stronger if more people are participating and investing in startups. So that's what we're all about at Wefunder.
It is time for our favorite podcast. Are you looking to raise capital? Tired of trying with the banks? Or are you potentially an investor looking to invest in some startups? Maybe you're not an accredited investor, but you want to really get in on some interesting startups with community and all that. Well, I brought on Jonny Price. I think you're the president of Wefunder.
That's right. Right? President of Wefunder, yep.
All right, and former director at Kiva. You're at the forefront of democratizing access to capital for startups and everyday investors. Whether you're a funder looking to raise funds, an investor curious about new opportunities, or just someone interested in the future of finance, this episode is for you. How are you doing today, Jonny?
I'm doing good, man. Yeah, hello from Nashville, Tennessee.
Nice. A lot of people don't even like to say where they're from anymore these days.
Oh, really? I'm very fine. I'm fine if the world knows. I'm from England, from London, and then spent 10 years in San Francisco, which is where Wefunder's based. But yeah, 5 years ago, moved to Nashville, where my wife is from. So we're here with our 3 kids in Nashville.
Nice. All right. Well, hopefully you like music and all that. But let's cut to the chase here. My name is Gregg. This is Cut to the Chase, and let's go straight into I heard crowdfunding, Kickstarter several years ago. Let's start with that. Like, how is crowdfunding different than Kickstarter?
Yeah, so Wefunder is a platform that's been around now since 2012, and it allows people to invest in startups they love. So Kickstarter is more like perks. So you back a movie, maybe you get the t-shirt or you get a discount on the product. There's no investments at all. And so the way Wefunder is different is that it's kind of like Kickstarter in that the money is crowdfunded in small increments. But when you invest in a company on Wefunder, you're actually hoping for a financial return, which is the big difference versus Kickstarter, or like a GoFundMe is another crowdfunding platform that people might know. So in Wefunder, companies are raising money from a large group of people, a crowd, and those people are investing in that company. It can be a loan that's paid back with an interest rate, or it can be an equity investment in the company, much like a venture capital investor or an angel investor would make. And you can raise up to $5 million on Wefunder. The average company raises about 400 grand. And that's coming from 400 people investing $1,000 each. And so that company raises 400 grand. And then hopefully those 400 people get a return on that investment. Maybe that company is acquired in a few years' time. The dream is that it goes public, it IPOs for a huge exit. Most of them will go to zero. Investing in startups is super risky. It's also super liquid on the stock market. If you invest in a company on the public stock market, you can turn around and sell it the next day if you need the money. With Wefunder, with these early stage private investment opportunities, the money is locked up oftentimes for many, many years. And it's super risky. A lot of them will go to zero. But it's kind of high risk, but also high reward. If you invest early in a company and then it does do very well, then obviously there's a high upside there.
All right. So tell me, what kind of startups are best suited for raising money on Wefunder?
Yeah, I would say honestly, like any startups that are focused on building community, which could be a tech startup. We have a lot of very successful venture-backed tech startups that are raising on the platform, but it could also be a restaurant or a coffee shop or a brewery or a distillery, a Main Street business. We've had a soccer club down the street from me in Chattanooga. Chattanooga FC raised 900 grand or so from 3,500 Chattanoogans. kind of Green Bay Packers style, right? Owned by the fans. And the idea is that the Green Bay Packers have the most passionate fans in the NFL because their fans are owners of the club. And so if you're an entrepreneur and you think you agree with me that if you let your customers and community invest in your business, then they will love you even more and they'll, be even more excited brand ambassadors and evangelists for the company. That's really the idea. So yeah, if you have an audience of customers that love the business, the brand, the product, you as the founder, this is a way to turn those supporters into investors, and they don't need to be accredited. They don't need to write a $10,000 check. Average investment on WeFunder is $1,000. The minimum is just $100. So the idea is, if you're a business, maybe it's tough to raise capital, but you have a customer base, a fan base that loves you. You can now turn those fans into investors, raise a bit of capital from them, and turn them into even more excited brand ambassadors.
All right. So, I've got a buddy, he's got a restaurant. He's having trouble raising money from a bank. He's got some followers, obviously people that come to his restaurant and like him and community. What is his game plan if he wants to do this? Should he basically reach out to his community, his followers, and see if they even would be interested in before approaching you, or does it not matter? What would be the best way to handle it?
Usually, I'd recommend talk to us, and then we can kind of guide you through the process. But yeah, you can. One of the early steps can be to decide if it makes sense to do this, to go to your community and ask them, "Hey, we're thinking of raising money in this way. Might you be interested in investing?" And then kind of gauge interest. And then if there's enough interest, okay, we can move forward. And our team would advise entrepreneurs on kind of how to do that, and if it makes sense to do that. So yeah, that would be a good first step. And then our team, in terms of what should the investment structure look like? Should it be an equity investment or a loan? It's quite common for equity investments into restaurants to be structured in a certain way where the investors get maybe 80% of the profit distributions until they get paid back their principal, and then they get 20% of distributions thereafter, something like that. So we can kind of help the entrepreneur think through that. And then the other piece to consider, I mentioned that a difference between WeFunder and Kickstarter. Kickstarter's perks, WeFunder is investments. And that's true, but investments on WeFunder can also be associated with perks. So I think it's really cool when we see restaurants on the platform. They might say, if you invest $500 in the restaurant, then you get, let's say, half price on wine. And maybe that's a big giveaway. So maybe it's like if you invest $2,500, then you get half price on wine forever.
Yeah.
And that's kind of cool for the investor. They're getting a real like discount on wine. So that probably means that they're going to go more often. And then they're going to spend a bunch of money on food, and they're going to bring their friends, and they're going to proudly tell them, "Hey, I'm an investor in this restaurant, and I get half price. We get half price on wine because I'm an investor." The restaurant's still making money on wine at half price. I think they make maybe 60% gross margin on wine. So even on every bottle of wine, they're still making profit. But then they're also making full price on the meal, and so everyone wins. And if you're raising capital as a restaurant from large investors, large checks, then it's tougher to make the economics work in terms of, discounts on food or wine or whatever. But if you break the investments into small amounts, then all of a sudden half price on wine can be, oh, that's how I make my money back. And then hopefully I get the equity return on the investment as well. But yeah, when you kind of lower the amount that people are investing, then all of a sudden, like you can actually start to get to yes, and entrepreneurs can start to raise capital. Where if they were raising large checks, it might be tougher for them to raise the money they're looking for.
All right, so I'm going to be tough on you here because we're talking about investing. People don't want to lose their money and all that. So give me your background. Give me WeFunder's background. How long have you been around? How many companies are in your platform? Is that the accurate question? If I'm an investor, and I want to go on your platform, how many different companies can I look at?
So yeah, my personal background, I started my career in strategy consulting with a firm called Oliver Wyman. I did that for 6 years. And then I went to work for a nonprofit called Kiva that was doing crowdfunding microloans for entrepreneurs. And then I've been at WeFunder now for 7 years. WeFunder was founded as a company in 2012, went through Y Combinator in 2013. And we've had some really awesome companies raise on the platform. So Mercury Bank is a great example. They raised 5 million on Wefunder from 2,500 of their customers as part of their venture-backed Series B. They raised 120 million from VCs and 5 million from their customers. And they just closed the 300 million Series C led by Sequoia, which is probably seen as the best venture capital firm in the world. So nice example. Beta Bionics is a company that raised $1 million from Wefunder back in 2016. It was one of the first companies to raise $1 million when the laws were rolled out in 2016, and they just had an IPO this year. I think it was in the order of $1 billion. So a nice kind of example of an IPO, but it took 9 years, you know. And then we have, you know, a bunch of Main Street businesses as well. Like there's a restaurant down the street from me in Nashville called Bad Idea. They raised 750 grand or so from 159 of their customers, local community residents. Just got nominated for a James Beard Award, New York Times, like best new restaurants list. So yeah, and we've now funded 2,000 companies, coming up on $1 billion raised on the platform. And if you go on the website now, wefunder.com/explore, you can probably find like a couple of hundred companies or something like that. And yeah, there's a bunch of information on there that you can use to make an investment decision. There's financials. The SEC require that financials are shared. And if you're raising more than 124 grand, they need to be reviewed by a CPA. So you have an accountant who's kind of looking at these financials and signing off on them. And then you can also see who else was invested. So if you want to be kind of, you know, maybe conservative about it, you can see, okay, there's a VC that's investing on the same terms, leading the round, setting the terms of the round. Okay, that gives me confidence. You can follow other investors on Wefunder. So you can see, okay, this person looks pretty interesting. I can follow them. So whenever they make an investment, I get an email notification. Okay, this person I'm following just invested. So, okay, let me check it out. You can find businesses that are near you. There's a map feature where you can find businesses near you. And then maybe you reach out to the entrepreneur. Then you grab coffee with them, or ask them a question on the website. So you can kind of gather more information before deciding to make an investment. So there's a lot of good information that you can use as you evaluate who to invest in. The one thing I'll just circle back to, investing in startups is super risky. You know, if you invest in 10 companies, like maybe most of them will go to zero. And so there is high upside, but there's also very, very high risk. The money's locked up for years. So we try to make this super explicit and encourage people, like, don't invest more than you can afford to lose. You know, it should be a pretty small percentage of your portfolio that's being invested in these early stage risky startups, in the vast majority of cases. But we also, our founders back in 2012, it was illegal for ordinary people to invest in startups. You had to be an accredited investor, basically a millionaire. And our founders said, this is not fair. This is not very American. I can invest in any company on the public stock market. You know, I can invest in Starbucks on the stock market. I can go to Vegas and drop $1,000 on the spin of a roulette wheel. Like, why can't I invest $1,000 in my friend's local coffee shop? This is stupid. So, yeah, they helped, along with others, kind of lobby Congress, change the law. That was the Jobs Act of 2012, rolled out with the SEC in 2016. So we think it's a good thing that anyone can invest in startups they love, founders they believe in, causes they care about, and it's super risky.
Okay, so super risky meaning you can lose everything that you put your money into.
Yeah.
Even if you don't lose your money, it's tied up. You can't just call you up and say, "Hey, I want my money back. I need whatever. I don't
Exactly.
care whatever equity I built up into it and all that." Let's talk about the top side. What are your results? What are your best results?
Yeah, I mean, the example I gave earlier of the company, right, that raised $1 million back in 2016 and then IPO'd for $1 billion, you know, Mercury Bank, the company I mentioned that raised from Sequoia. I mean, there's a lot of companies that, at least on paper, are delivering, you know, pretty significant upside here. There were some companies that we got into earlier on in the lifetime of Wefunder that have generated very interesting returns. But yeah, it's also like, it's pretty early days. So until 2021, the rules were not very conducive. And so since 2021, the caliber of companies that have been willing to raise money in this way have significantly improved. And 2021 in the life cycle of kind of venture investing and startup investing is a pretty short cycle. So I think some of the most exciting returns probably are brewing right now and won't be realized for, the next few years.
All right. So, there's potential legislation that could, really shut down the solar wind industry. Just going to throw that out as an example. But that's big money kind of operations. Let's say I'm pissed that they're going to end solar or not end it, but they're going to phase out the credits and all that, and the industry is going to take a hit. Is do you Are you involved in that at all, or any of the companies in the renewable space?
Yeah, we've certainly had a number of renewable energy companies raise on WeFunder. I mean, the most you can, well, technically there's an exemption called Reg A plus where you can raise up to 75 million, but we're more focused on this exemption called regulation crowdfunding where you're limited to raising $5 million. So oftentimes, right, if you're talking about like large projects and like much larger sums of money, then it may be more money than would be typical on WeFunder. Like I said, the average raise on the platform is just 500K. But yeah, we've certainly done a bunch of renewable energy stuff. Neighborhood Sun is one that comes to mind, a solar company on the East Coast. Hemp Architecture, I mean, there's not really so much renewable energy, but they're making building materials out of hemp, really interesting company,
Yeah.
raised $5 million on the platform. So yeah, industry wise, honestly, we're very eclectic. So we have the soccer teams and the restaurants, breweries, coffee shops, and then we have tech startups, and then we have biotech startups. There's a company right now that's curing cancer on WeFunder. And you see a lot of the investor nodes. Whenever someone invests on WeFunder, I get a Slack notification. Then after they invest, we ask them, "Hey, why did you invest in this company?" And then if they write a reason for why they invested, we see that in the Slack. And there's so many examples of biotech companies or medical devices companies. Like people, I saw one investor note the other day. I was just diagnosed with cancer, investing in this company that's trying to cure cancer. And I think a lot of the motivations that people have when they invest in companies on WeFunder, sure, they hope to make money on it. But there's also this kind of mission element and this kind of social impact piece, which is kind of a hybrid motivation that a lot of investors have. Like when people invested in Chattanooga Football Club, or the Oakland Roots and Soul as another football club, or Minnesota Aurora, Detroit City FC. We've had a number of soccer clubs raised on the platform. And I mean, sure, those fans are hoping to make a return financially. But I think a big part of probably why most of those people invested is just kind of pride and like being an owner of this club. Or I want to invest in this local restaurant in my neighborhood. And I kind of take pride in supporting a local entrepreneur and kind of building the fabric of my neighborhood. So at least from what I can tell from everything I've seen, people's motivations for investing in WeFunder are kind of twofold. Sure, I want to make money. It's different to Kickstarter or GoFundMe, but there is also this kind of social impact or mission part of the equation as well.
Wow, you really have been Americanized with that British accent and calling these sports teams
And then
soccer
soccer
clubs.
clubs, right? Don't
Yeah,
tell my friends back at home. I'm not sharing this podcast with my buddies back home. They'll disown me.
well, this might go viral, so you never know. You might not have any choice. All right, so we're talking sports. Besides soccer clubs, what about like minor league baseball teams or hockey teams? Have you had any of
I,
that?
I don't think so. We had an American Ultimate Disc League. I've chatted with the guys at Major League Cricket, which will be just a dream for me to have a cricket club raised on WeFunder. Trying to think, I don't think we've had any other soccer clubs. I would be quite interested in that. I feel like the MLB teams, the minor league baseball teams, are kind of associated with the kind of MLB teams, right?
Yeah.
And so that there may be a kind of they're not actually like looking for outside investment. But yeah, we'll keep our eyes peeled. If there's any, I do think it's a good fit. If there's any kind of emerging like sports or kind of teams in those sports, I've had some conversations from memory. It's only the Ultimate Disc League, which is the Frisbee, right? Ultimate Frisbee League. They raised with us. Actually, their lead investor on the WeFunder was Bill Nye, the science guy, which was a fun one. Apparently, he's a big ultimate frisbee fan.
Oh, nice. What about like the Formula One series, like the EV series?
Oh yeah, I would love that. No, haven't spoken to those guys. If they wanna do it, I would love that. I'm a big Formula One fan. Growing up in the UK, that was a big. We don't have NASCAR over there or
Yeah.
IndyCar, but Formula One is big for us. So that would be a dream.
Yeah, yeah. All right. What about the pickleball world? That's
Oh
exploding.
yeah, we have spoken to a couple of pickleball. There should be a pickleball league. That would be a fun one. But pickleball venues, a couple of facilities, like maybe local clubs, I
Yeah.
think have maybe raised some Wefunder or at least have seriously considered it. But yeah, that's a craze. It's like exploding, and that's a good example to your question earlier of who it's a good fit for because people love pickleball, right? They just like there's a community around it. People are so passionate about it, and I feel like anytime there's like a fan base, a passion, like a strong community, that's a great fit for WeFunder because oftentimes those people that are part of that community would love the idea of actually investing in a company that's helping to build that community.
Yeah, I can see that. All right. So, we're talking about companies and all that. What about like somebody that's in the real estate space and they're making individual investments, buying, multi-unit places and all that? Um, are you available for that, or is that outside of your bailiwick?
A little outside of the bailiwick, that it sounds like you maybe have share some English heritage if you're using words like bailiwick there, Greg. But yeah, we don't do as much on the real estate side. We have done a couple of projects in that area, but there are other platforms. There's a platform called Small Change, who actually raised money on WeFunder. It's kind of like WeFunder for real estate. But that's a pretty interesting one if you're a real estate fund manager looking to raise capital. That's a great platform. Would highly recommend. Their founder Eve is who she's an Australian lady, so me and her both spell color with a U.
Yeah.
And that'll be good if you're like a real estate developer raising capital. That will be an interesting platform to check out. Small Change, and it's smallchange.co. Real estate investing for everyone.
Okay. And obviously your platform is not, somebody's got a horrible medical situation and they need money to, this is not, you're not doing that.
Correct. Yeah, correct. The small businesses and startups, tech startups, entrepreneurs, companies are raising capital on WeFunder, and yeah, operating companies versus kind of real estate companies.
So just to let you know, I did live in London, Teddington, right next door to Thames Television. I used to hang out with Benny Hill or whatever. He would come to my,
Oh yeah, I love that.
and then I actually squatted for 3 months. And I'm sure you know about squatting or whatever, but
Oh
I
yeah,
I
yeah,
can't reveal too much of that on
yeah,
my show band or whatever. All right.
yeah.
So what do you think is the biggest opportunities in fintech for the next 5 years?
Yeah, I mean, I think crypto is going to be really interesting with the Trump administration. I think they're going to, really do a lot of work to clarify crypto regulations. So I think that would be interesting. Obviously, AI is gonna. There was I think it was a Mark Andreessen quote: "Software's eating the world." Now, AI, I feel like is eating software,
Yeah.
and so AI is just going to have massive implications for fintech. And then obviously, I'm biased. The new acting SEC chair said in a speech recently that more retail investor participation in private companies was a top priority of his. If you think about it, like, and this is a part of WeFunder's mission, WeFund is a public benefit corporation. WeFund.com/charter is our PBC charter, which is a big part of why I work here. But it used to be that companies went public a lot earlier. And so a company like Amazon, they went public pretty early. And I don't know what's Amazon's market cap, like probably close to $1 trillion or something. But whatever it is, all of that wealth, $1 trillion in wealth, was able to be participated in by retail investors, middle class Americans, because if it's a public company, middle class Americans can invest. But these days, like a company like SpaceX, their valuation is also very, very high. I don't know, super high, hundreds of billions. And all of that wealth has been kind of not able to be participated in by unaccredited investors, retail investors. And so part of WeFunder's mission is let's capitalism is creating all this wealth as these startup tech companies expand, then we need to allow a broader swathe of the population to participate in the wealth that's being created there. And if all these AI companies are going to, become trillion-dollar companies, and all of that wealth creation is concentrated in the hands of accredited investors, then that's just going to be another force that's kind of concentrating wealth in the hands of a small kind of percentage of the population.
Yeah.
And so that would be my hope as well. The third kind of idea for fintech is what we're doing. We fund the democratizing access to investment opportunities in early stage private companies, so that the wealth that they're creating, we kind of share that around more broadly. I always say, like at Uber's IPO, the earliest like accredited investors that invest in their seed round made tons and tons of money. Like, wouldn't it have been cool if we made 1,000 early Uber drivers millionaires at their IPO? So yeah, the new SEC chair seems to be pretty interested in that idea. Companies are going public later and later. Like, let's try to enable retail investor participation in the wealth that those companies are creating even before they IPO.
Okay. All right. I want to end the show on these two questions, and this is for founders interested in doing a crowdfunding campaign. Give us the three best tips on how to start one of these, and give us the three mistakes that you see that crowdfunding people typically typically do.
Yeah, so number one, I think, would be just make sure that it makes sense for you to raise money. So I think sometimes entrepreneurs would just default to like, okay, now I need to raise money. And it's like, no, you shouldn't. You should just like keep making progress on the product, like making something people want, generating revenue. You don't actually need to raise money. And if you spend your time raising money, then that time would have been better spent generating revenue and building the customer base. One, because that is like kind of free money. It's not dilutive. You're not giving up ownership of the company. So it's actually like cheaper money for you to raise revenue from customers. And two, because unless you have customers, no one's going to invest in you. So you're just going to waste your time pitching investors, and then they're going to be like, well, where's the customers? And so the first thing is make sure it actually makes sense for you to raise capital. And you need to raise capital. I think I see way too many entrepreneurs like default to, oh, I need to raise money. I'm blocked by raising money. It's like, no, you're not blocked by raising money. You're blocked by getting customers and working on the product. So focus on that. I think then if it does make sense for you to raise money, then really get the story straight, get the investor pitch straight. Why should people invest in you? What company are you building? Why is it awesome? Why are you the right person to run it? Show me the progress that you've made. Show me the plans. And if you're raising a Wefunder, make just an awesome page that people are reading that and it's like, oh, okay, yeah, this is something I want to get behind. And then thirdly, just hustle. So there's just going to be a linear correlation between like how many investors you pitch and how much effort you put in and how much money you raise.
Yeah.
And I see too many people, it's like, oh, well, I've made my page, put it up there and like see what happens, or expect the Wefunder investor base to do all the work. It's like, no, you got to go out there, you got to close the checks. I do think we make fundraising easier because now you can raise from unaccredited investors, you can publicly promote it, you can get in front of Wefunder investors, etc. But we don't make it easy, and it's going to take hustle, elbow grease. So those are the kind of the three things that I would encourage entrepreneurs to do. And yeah, I guess the mistakes I've seen people make, kind of, I guess the opposite. Raising money when you actually shouldn't be raising money. You should be focusing on building the product and growing customer revenue. Just kind of launching with it without a story or without a kind of a crisp page or narrative, and then just like not investing the time and effort. And just kind of hoping that it's going to happen to you. You got to hustle, you got to put the hours in. So yeah, and then talk to us. Launch at wefunder.com is our email, or wefunder.com, and you can just click to raise capital and explore around on the website. But we're here to help if you do want to raise money in this way. from your customers and community, from your broader network, as well as VCs and accredited investors.
All right. That sounds very exciting. I mean, these kind of opportunities were not around 10 years ago. If you wanted to do private equity, good luck if you didn't have $1 million. So now democratizing all these types of investments. Jonny Price from Wefunder, here's your opportunity to make an investment in a company where you can be part of the community. Think about that. I mean, how exciting is that? Not just like dropping your money into some stock market and then like crossing your fingers and, whatever. Maybe one day you're going to look and see what they're doing. Jonny, did I miss anything? You gave your information on how to find you. Is there anything else you want to add to this?
I don't think so. Thanks so much for having me on. Yeah, if you're an entrepreneur looking at raising capital, Wefunder could be a good option for you to consider. As either part of the mix, can be alongside other forms of capital. And yeah, if you're looking to dip your toe in the waters of angel investing in early stage startups, there's a lot of opportunities on the platform, and you can kind of browse around, like see if any take your fancy, ask the founders questions, like and try it out for as little as $100. We're trying to just lower the barrier to entry, get more people participating in investing in startups they love. And we think, the economy would be stronger if more people are participating and investing in startups. So that's what we're all about at Wefunder.
All right, nice. Maybe even podcasters. I didn't think to ask that, but we'll save that for another episode. All right, folks, you know what to do. Subscribe, share this. Please share this episode. Rate, review. Any comments? Go to my YouTube page. If you want to find Jonny, I'm going to give you all the information. Jonny, take care of yourself, and we'll circle back someday in the future, all right?
Love it. Thanks so much, Gregg. Thanks for having me on.
That's all for this episode of Cut to the Chase. But before you go, will you open up your podcast app and give us a 5-star review? You can also leave a comment about what you liked most or other topics you'd like us to cover. And please be sure to subscribe so you don't miss any upcoming shows. Thanks, everybody. Be safe out there.